Cross-chain swaps are on the precipice of amazing growth, as confidence in centralized exchanges has really declined with the collapse of FTX. And in this video, I interview Aaluxx, the co-founder of Maya Protocol, which seeks to be the friendly fork of Thorchain. And for those of you that aren't familiar with Thorchain, it's a decentralized liquidity protocol that simply allows you to swap between native crypto assets despite them being on different blockchains, allowing you to gain exposure to the actual crypto asset in question, where traditionally you would use something like Uniswap and take your Ethereum and try to swap for wrapped Bitcoin, which although gets you exposure to Bitcoin's price action, however, it is a derivative asset that lives on Ethereum and has to be backed by Bitcoin. And that Bitcoin has to be held in a smart contract or multi-sig wallet, meaning there is a security concern if either of those things get compromised. And so Thorchain eliminates this security issue. And I actually did an interview with Chad Barraford, and I highly recommend you check it out if you haven't. Maya Protocol seeks to do a lot of what Thorchain does by giving more exposure to this technology across the crypto space. It also has a couple unique twists that kind of build on some of the things that Thorchain has already created. Aaluxx is an incredibly insightful and intelligent individual, and we have an amazing conversation. I do want to point out, though, that I was not paid by him or Maya Protocol to make this video. This content is not sponsored, nor is this video meant to be an endorsement of Maya Protocol. Rather, I want this video to be educational and informational for those of you that are watching, and I hope this gives you an opportunity to learn a lot about Maya Protocol. I even took the time to read the white paper for all of you, so I greatly appreciate you guys taking the time to watch this video. Nothing here is financial advice. I'm not a financial advisor, and you can be an adult and come to your own decision. Anyways, with all of that being said, welcome to the show, and here comes Aaluxx from Maya Protocol. Enjoy. How are you today, Alex?
All good. Great.
Or Aaluxx, sorry.
Great intro. Great description of what we're doing.
No, thank you. First thing I want to say is, like, I myself am a Thorchad. For those of you watching, I did an interview prior with Chad Barraford. You should definitely click that link if you're not familiar with these kind of projects and these cross-chain liquidity protocols. So with that being said, Alex, the first thing I wanted to ask you, as a cryptocurrency professional in the space, what drew you into cryptocurrency, and how did this all unfold into the creation of the Maya Protocol?
Yeah, well, I'm a sucker for math. I like math, and I also love economics, statistics, all of that. And I think crypto puts that all together in a neat fashion, and I just think it's very elegant. I've been a fan of obviously Bitcoin and Ethereum for probably 5 or 6 years already. And I'm the type of guy of going into white papers and just reading the hell out of them. So I think that's a practice that maybe not many people do. I know you do it. I saw you do it this week with us. But many people don't. And I think that's kind of one of the most important things that you can do. Go sequentially. Start with Bitcoin. And then go to Ethereum and go in order. I like to go chronologically because you see all the advancements building on top of each other, and I just find it super cool. And we come from the software development background, me and my partners. We're 3 co-founders, and we are kind of in the software development business, doing software for clients, and we are also from the startup world and love scalability, and love technology in general. And there really is not a business that's more scalable than crypto. So just that part is absolutely blows my mind. You have no borders, you have no limit. It's just crazy scalability. So that's something I found always pretty cool. And also I'm a lot in favor of decentralization. I really think and believe in the mission Satoshi Nakamoto came out to do, and we need to see it to the end. It's not enough because right now there's many different cryptos, and you exchange them all in a central exchange doesn't make any sense. So we need to see it through to the end. I was always very much a fan of decentralized systems. And I just fell onto Thorchain, fell instantly in love. I'm a huge fan. Guys, if you haven't seen the Chad Barraford episode, go watch it. Crazy intelligent guy, also huge heart, and very much mission driven as well. And yeah, just love what they were doing. And one day I just saw a webinar where one person was saying like, there's probably going to be 3 to 5 Thorchains in the future, and I was like, oh, I want to be second. And I'm Mexican. I'm very proud of Mexico, obviously with its faults, but I'm just proud of our culture, and instantly thought Maya as name, and then if it was going to be Maya, that the coin should be called Cacao, and the rest is history. So we put to work, and it was a lot of research at the beginning and just testing stuff out and getting the handles on. Thorchain is a monster code. It's huge code base, and they keep developing. They develop crazy fast. I was mentioning in Twitter this week that it's just hard to keep up. They're a great team all around, and really a great technology.
Absolutely. I mean, it's insane how far that project has gone, everything they've been through, and how dedicated that team has been through various bear markets, a hack, the collapse of Luna. I mean, all of those would have probably destroyed most projects, but they just saw it through and found ways to keep everyone whole. And you said it better than I ever could. You said Chad has a big heart, and having the opportunity to speak to him, totally agree, but I don't want to get too lost in that. So the next thing I wanted to ask you, although I would say this is a very small portion of Thorchads in my experience, I would say when I have conversations with fellow Thorchads, I would say 99.9% of them are in huge support of your team and what you guys are doing. So out of curiosity, when I was going through the white paper, you start out by kind of making this point that you are kind of complementing one another, helping each other reach the same mission and the same goal. What would you say to Thorchads that are hesitant about your mission currently?
Sure. So we need to understand that this is not a Thorchain versus Maya, or even Thorchain technology versus Uniswap technology. It's central versus decentralized. That's all there is. That's the only war to be fought here. The more people involved, the more eyes on the code, the more fresh ideas, the more money and liquidity behind these, the better. So just in that regard, even if we didn't complement each other, which we do in some other ways that I'll mention soon, it already is beneficial to that battle that is being fought right now. We have taken hits, they have taken hits. FTX is a huge hit in the centralized philosophy.
Of course.
And great for the Thorchain and decentralized just narrative. But we need to keep going. So just in itself, great. But there's a second problem, and this is a very deep one. I'll get into the more practical one, but the long-term one, the long play is the following. There's something that is called the price leader. What a price leader is essentially the biggest player in the market sets the price for stuff. That's called a price leader. So currently it's Binance for most of assets. And even though, you can think CZ is a great guy, I believe he probably is. Don't know for sure, don't know him. But he's the one setting the prices, or his technology is. And everybody else in the game essentially pays tribute to the price leader in the ways of slippage. So when you're trying to bring up your prices to be as high or as low as a price leader, there's a certain loss there that is essentially lost from you and not for the price leader. So it's a huge competitive advantage to be that incumbent in a market. And the problem is it's a centralized player, and we depend on that price setting. And in the future, if, Kraken becomes the leader, then it still is the same problem. It's a centralized price setter. And the problem is the rest of the market eats the slippage. And you'll find it in decentralized protocols as impermanent loss. And impermanent loss actually could be greatly reduced if your price was already the right price and the people were doing arbitrage against you, not with you.
Right.
So then, with that in mind, what I believe the long play to be is for there to be a set of Thor likes that work the same way. They're just pools, and they have very tight arbitrage. You know, Cosmos SDK has something called instant finality that both Thorchain and Maya inherit. And instant finality means it's actually very fast. And since it's permissionless, you're doing it all directly through the API. And if you just have a full node, you're essentially going lightning fast in these transactions. But if we had 3 or 5 of these together, super tight arbitrage, behaving as one big system, and I'll explain in a second why it's a one big system, then it can become the price leader together. And that's what I believe the long play is, that most liquidity and most volume happens through these decentralized protocols, and that central exchanges need to pay the price to set the price against us. And that's where we won. That's where we won. And the impermanent loss will be greatly reduced at that point, and it will just be so much better. And we're not that far. We're not that far. It's totally possible. Decentralized protocols are gaining market share every year, and cross-chain technology is gaining thanks to Thorchain. Its foothold and will soon explode, I believe, in the next cycle. So I believe we can reach that. And yeah, in the short term, and why it behaves like one big system is that in the way fees are calculated in Thorchain and in Maya, it's with something that Thorchain coined. That's the CLP curve derivation. And it's essentially, depending on the size of the transaction relative to the depth of the pool, is how much that fee is percentage-wise. And it increases actually. If your transaction is very big compared to the pool depth, this fee increases. But if you have Maya and Thorchain, and they have their own pool depths, it can actually be beneficial for big transactions to split into 2 smaller transactions that are wired in parallel through both Maya and Thorchain. Or if there's a third option, also that third option. And the thing is, these big transactions is actually where the money is. These are the ones that are most important for infrastructure. These are the ones that raise the most revenue. These are the ones that you are finding hard to compete with, and the ones that mostly goes to centralized channels because they will just get very, very small fees. So together we can compete for these transactions because all liquidity plus your liquidity makes a bigger pool. The only caveat being that you'll pay double gas for going through both routes. But this gas starts being very small when these transactions are very big. So very quickly you start getting actually savings, and this will make both Thorchain and Maya more competitive. And that's what we need to be doing: being competitive, being more affordable, generating more demand, access, having a larger set of transactions where we can be beneficial and feasible.
Yeah, I mean that. I mean, that's a rallying cry if I ever heard one. No, definitely agree with a lot of what you said. And there's a whole lot you said there. So I'm going to go in order here. The first thing I wanted to know is you really did a good job of eloquently mentioning some of the issues of one massive player consuming what is essentially 75% of the transaction volume in crypto, which is concerning. I think ultimately, though, it's not just that we have to reach using decentralized products, but also finding ways to integrate outside of the decentralized protocols, payments or a mechanism to go into fiat. In the Thordex wallet, if I'm not mistaken, I actually interviewed Arnaud Solomon from Met Pellerin. So they're able to liquidate some of these assets in several countries without KYC. So there is that element going in and out of the wallet. Out of curiosity, on your end as a co-founder, are you making, or are there plans to partner with people that will allow or the entrance into the market and out of the market without having to go through the centralized intermediary,
Beat you to it.
like a way to liquidate the assets?
Or we have a great collaboration going with Thor Wallet Dex. Thor Wallet already has this fiat on and off ramp, and they're actually partnering
Right.
with us for launch. So they will host my liquidity auction, and they will host my swapping thereafter. And they already have this. It is non KYC. It is not decentralized though. You can't really go decentralized in fiat on and off ramps. Uh, Issue being you're talking about physical stuff, and as long as you go into physical stuff and not information, that's where you must depend on different entities because you just can't come up with this fully decentralized system that can manage cash. It's not possible at this time. So with that in mind, I don't think the game like short term. Yes, Thor Wallet, great. I think there will be more players coming, and competition is always good for this end to keep people honest. But in the long game, I just think that fiat is slowly going away. That's the play. And not investing more technology into fiat on and off ramps. The question is, how do we get rid of fiat? How do we get more infrastructure into our phones? How do we get more infrastructure into our stores, vendors, infrastructure all around, so that we can completely get rid of this? And that rather the problem will be in the physical world on how to create physical representations of cryptographical means of exchange, so that in the certain areas where you cannot take your phone with, you can have some sort of credit, physical credit that will give you the crypto thing. So the crypto should be the real thing, and the fiat should represent it, not the other way around. So that's where I think the play actually is, but that will take time, adoption.
Of course, inevitably, I think like, I'm shooting from the United States, and obviously at this moment it's a privileged position to be when you're using the world's most valuable shitcoin. So I don't think people realize the long-term implications of modern monetary theory or Keynesian economics, or this idea that you could just print money forever and watch these things get devalued over time. So in that theory, perhaps cryptocurrencies in terms of price will inevitably rise higher as more fiat enters the system at a faster pace than cryptocurrency projects can start or be created. But I mean, that's an ethos a lot of us understand. The next thing I noticed from your first statement, you mentioned how prices are set through arbitrage. So during that arbitrage process, is a part of that because you're attempting to, you're basically avoiding the use of oracles for pricing, like to create a more efficient market?
Yeah, you have two options when setting price. You could just say, oh, it's worth what Binance says it is, or you let the market decide. And the market will also decide that it is Binance who is in the right. The advantage being the second one is much difficult to trick, whereas an oracle is easier to make at fault. But arbitrage essentially is very simple. If there's an asset that costs 20% more in one place than in the other, well, you'll buy it in the latter, sell it in the former, and make a 20% profit at it, right? But in doing so, you increase demand for the one that was the lower price. So you increased its price, and you increased the supply in the one that was more expensive. So also lowered its price, and thus you get the same pricing in both, and that's arbitrage. But there was profit made. Who made the profit? Arbitrage, and that profit had to come from somewhere. Where did it come from? One of those two systems or both? So the way Thorchain and Maya work is through this mechanism. We don't really have an opinion in code of how much assets should be worth. It's all up to the market. So how it happens then is that as there's price fluctuations in central exchanges, Arbitrage seeks to close that gap, earning profits, and this is translated into value lost in Maya and in Thorchain. That is also then offset by the yield generated from so much swapping. So these two forces are against each other: the value extraction from arbitrage and the value gained from yield, from transaction volume. And so long as this is higher than this, we're healthy. But there will be a future where the supply and demand is happening within these kind of Thorlikes, and it's the central guys doing exchange against us. So I think that will be an interesting point in time.
Looking forward to it.
Yeah.
So one thing that I think is a little unfair, it's a compliment, but I think it's a little unfair, is when everyone refers to Maya as, not everyone, but a lot of people refer to Maya as like a fork, which is fine. You know, there's a lot of things in common, but after reading the white paper, I think it's almost a little unfair. There's a lot of unique innovations that you guys are really seeking out to accomplish. The first thing that I thought was extremely interesting was how you guys are very different in terms of securing the network in your node infrastructure. So you guys use liquidity nodes. For anyone who's watching, maybe from the Thorchain community, or maybe just an average crypto person or someone from the Cosmos ecosystem. By the way, Maya is on the Cosmos blockchain. It's built with Cosmos SDK, Tendermint, etc. Forgot to mention that. Can you describe the differences between the nodes on Thorchain and the liquidity nodes, and why it's more capital efficient?
Sure. So first off, the current bond design in Thorchain is great. It's amazing. I find it mind-boggling how they thought a lot of this beforehand. So in hindsight, things just always look easier than they really were. The design that these guys made is airtight. One of the things, though, is they made a choice of what to bond with. And bonds in Thorchain are very important because nodes are essentially custodying assets. There's a custody of assets, not user funds, but liquidity provider funds. And these bonds serve as a hedge against that, in the sense that a node will post a larger bond than what they're securing in assets, such that misbehavior from the node will mean losing more of their bond to make the LP that was stolen from whole again. Okay? So this is what the bond's in for. And also the bond is for a second reason, which is to avoid collusion from all of the nodes, because they could also all together kind of collude against LP funds. But if they did so, they would also, again, lose more from the bonds that they lost. So we essentially keep them honest through economic incentives, because no rational actor wants to lose money. We'll talk about irrational actors later. An irrational actor like the government trying to shut Thorchain down could go ahead and do it, but it would mean a huge loss for them and actually profit made by the network that they can then close and open up a new one and kind of be the game where things are coming out and you're smashing them. If the government ever wanted to do that with Thorchain, they could just pop up somewhere else and continue. That is if they tried an economic takeover. If they did a legal restriction one, that's a different story. They could tell Amazon to shut down nodes, and that would be a problem. But there's bare metal nodes, so that's another priority that Thorchain needs to, and Maya as well, need to focus on. But that's a tangent. Sorry about that. But then
no problem.
The thing is, Thorchain chose as their bond Rune, their native token, and the bond mechanism is actually very simple. In stability, nodes are bonding twice as much as there are external assets in the network. Okay, so if there are 100 Bitcoin in the network, Thorchain must have 200 Bitcoin worth of Rune in the network to secure that Bitcoin. Okay, that way, if they misbehave, they get slashed. It's not always instability though. It has something called an incentive pendulum, which basically you let the system go freely with the market, and as it goes out of balance, there's a countermeasure to bring it back to balance dynamically. So that's an incentive pendulum. So where lies the problem? The problem is the following. Let's go back to the 100 Bitcoin. You had 100 Bitcoin. If you had 100 Bitcoin, the LP, the liquidity provider, also had to bring 100 Bitcoin worth of Rune for the pool. So we're at 200 Bitcoin.
Right.
And then the node had to bring 200 Bitcoin to secure the 100 Bitcoin. So you're at 400 Bitcoin. But in reality, the only kind of purpose you're serving is to swap the 100 Bitcoin. That's what actually you wanted to do, have Bitcoin to begin with to trade. So you're having these 4x in wealth around to serve the trading of 100 Bitcoin. It's great, it's secure, but it's a bit inefficient. And essentially, this 200 Bitcoin worth of Rune from the nodes is in a safe. It's not going to work. It's stuck, okay? It's just there for a rainy day. For whenever the node misbehaves, it will be slashed. Great. So what can you do different? Understanding how Thorchain did work and the math checked out and Rune was worth something thanks to complementing the pool and being used as a bond. How can we get rid of this capital inefficiency? And the answer is, why not disregard those bonds entirely and have the node add liquidity and then bond this liquidity. Use that liquidity precisely to bond into the network. This way, again, if the node steals somebody else's funds, they will get slashed, so they lose, so they won't do it. Same thing. But this way, it's going to work. You know, every morning, as there's trading happening, this capital is going to work. And why is this good? Well, for the for one thing, remember for 100 Bitcoin, you needed 400 Bitcoin worth of assets. Now for 100 Bitcoin, you just need 200 Bitcoin worth of assets. So you need less capital, 50% capital. But there's a double whammy, because also in the past, the yield from these 200 of assets needed to be divided into 400 Bitcoin worth of wealth. So the yield was diluted across twice as big of a capital base. So now that does not happen. Right. So that means you need less capital, but also that capital is getting better yield. And that's amazing, because what you want is more liquidity. The reason for Thorchain to exist is to have liquidity. The reason for Maya to exist is to have liquidity. If we have more liquidity, swaps are more affordable. Okay? So this way, Maya is both incentivizing more liquidity to come in and requiring less liquidity to do the same work. Now, there is a problem though, when given that nodes bond liquidity units, they do have access to this real asset that will keep being worth something if the network is shut down. So nodes could actually collude. So if we had the same security assumptions as Thorchain, where 50% of the capital is brought by nodes and 50% of capital is brought by LPs, then it doesn't work. Nodes could collude in Maya and steal funds. So we must actually increase the amount of capital that nodes need to bring to 75% minimum and actually 82% instability. And it sounds like a lot, but it's all in the pools. So it works out. So anyway, analyzing and just comparing, to have $200 million in pools on Thorchain, you require $400 million of assets in stability. On Maya, to have $200 million in pools, you just need $200 million of capital. Now let's see the node part, because it seems that it's very high in Maya. Well, on Thorchain in stability, you needed $200 million of bonds. On Maya, it's 82% of the $200 million. So we're talking about 170 million. So we also required less capital, although in percentage-wise it's higher. In absolute terms of capital, it's lower. Another advantage is it's a very big risk for nodes to have 100% exposure to Rune. At the end of the day, it's a great asset, but it's not Bitcoin, you know? So here they have 50% exposure. So that's a bit lesser requirement on that regard. These huge nodes probably already have some Bitcoin lying around. Now they just need to get half of that on Cacao. And there's just other benefits that are all outlined in Chapter 3 of our white paper, but pretty cool stuff. So then on Maya, we need half the capital, less capital from nodes, and assuming same amount of liquidity and volume, people get almost twice the APY on their assets. So great all around.
Very cool. And the other thing I wanted to ask you, because I think it's worth exploring a little bit too. One of the benefits in Thorchain is because so much of the Rune token has to be bonded in order to facilitate these larger transactions. In theory, as the TVL increases, then the value of Rune increases as well dramatically. So out of curiosity, and just for other Thor chats that might be curious, is based on what I was reading, the model is obviously a little bit different. So how does that affect the fluctuation of price with Cacao?
What you're mentioning is the deterministic value of Rune. And the deterministic value of Rune is always at least 3 times the TVL. Why? Because if all Rune was either bonded or pooled, all of it, then in equilibrium also, which is another thing, when we're in total equilibrium of 50% of capital in pools and 50% of capital in nodes, then there's $2 worth of Rune for every $1 of Bitcoin in the node part, and there's $1 worth of Rune for every dollar of Bitcoin here in the pool. So it's $3 worth of Rune for every dollar worth of Bitcoin. So you have something that's just 3x. The deterministic value of Rune is 3x its TVL. On Maya, though, it's a bit different. It's just 1x because you only have this one part. It's all in the pool, right? So it's just 1x the value. Now, that might seem a bit bad, and the market cap of Cacao might look a bit smaller, but it actually is reflecting the increase in capital efficiency. So that's on the one side. The second side is you'll say, okay, but then let's say Thorchain and Maya are the same size, and the market grows 3 times, right? So it might seem like, hey, but Thorchain will be then 9 times bigger, and Maya will just be 3 times bigger. No, it's the same. They would both be 3 times bigger because the increase in the market already happened. So you already have the let's say you have the market cap of Thorchain is 100 million. That the deterministic value. That means the assets there, or let's say more simple. The TVL of Thorchain is 100 million. The TVL of Maya is 100 million. So the market cap of Rune is at least 300 million, and the market cap of Cacao is at least 100 million. And the market increases 3x, right? So yes, now we will have 300 million in TVL both. So that means the market cap of Cacao will be 300 million. And the market cap of Thorchain, yes, it seems it's, 900 million. That seems huge. The thing is, if you had 1% of the circulating supply of Thorchain, you still only made a 3x. The same if you have 1% of Cacao. So actually for you as an investor, in the exposure-wise, in both protocols, you get to enjoy the same increase in value. But this increase in market cap actually reflects the capital inefficiency of it.
Of course, and I really appreciate you breaking that down. So before we move on and start discussing the security nodes, which I'm extremely fascinated about that, I wanted to ask you one thing that I thought was very notable about reading through the white paper is that there's a focus on the Latin American market. I mean, the name is Maya, the Cacao's the money of the Mayan people, etc. Obviously there's a lot of nodes to Mexican culture. And when I was curious about, was that always the intention from the start? And if so, why focus on the Latin American market?
Sure. Look, I think Latin America is one of the regions in the world that needs crypto the most. We
Hmm.
actually have people working with us in Venezuela and Argentina. These guys suffered crazy inflation. They're suffering crazy governmental overreach, where they are expropriating funds and property and stuff. So they need security, and they're finding it in crypto. We're seeing huge adoption in Argentina, for instance, for crypto. So first, like I think that market needs it a lot. Um, Second, it keeps these governments in check because previously, as you said, I just print money and you eat it. It's printing money is essentially an indirect way of taxing the masses. Okay,
Of course.
indirectly. So the thing is, yeah, it's great. If I own the money printer, I just print more money and dilute you guys, and I use those funds to fund my government and my oppressive regime. The thing is, they can no longer do that with such ease because now people have
Hmm.
an option number two. I have an option B, which is Bitcoin, which is crypto, right? So it keeps these governments in
Hmm.
check. And then lastly, I just think the Latin American market is very proud and is amazing and has huge talent. And we see Latin Americans changing the world all around the world and
Hmm.
doing a lot of things, but it's usually doing it for somebody else. And I see not many Latin American teams building for themselves and believing in themselves. Because guess what? The crypto market doesn't care about your nationality. In the capital
Hmm.
markets, if you're American, you have access to the New York Stock Exchange and to Wall Street differently than as if
Hmm.
you weren't. But the stock market of the crypto economy is boundless. It's borderless. It's everywhere. You just need to connect to internet. That's it. So so we just have to believe in ourselves that we can do it, and it's something that we want to show with Maya. Um, Tap into that pride, tap into that talent, tap into that belief that we can do it. And it's what we have to show.
And one thing that I really appreciate about that is how you pointed it out is that they would need it the most. That's kind of what I was alluding to when I said we're just in the US, we're just pervy to having the best shitcoin in the world. But I mean, it's I think it's important to denote that like so many people don't get to choose their circumstances or what their government is going to do with the central bank or any of this stuff, and it could be extremely challenging. And it's incredible that there's so many like-minded individuals that now see the power of having a financial network that no one readily controls in a decentralized world. And that's why one of the reasons why I wanted to bring you on, because I think it's important that we get in this stage of more people coming in. We've seen the volume in Uniswap dramatically increase post the collapse of FTX, and even GMX, the perpetuals, decentralized perpetuals futures market on chain. There's several, but GMX is the biggest one, so that's the only reason why I mention it. Have also exploded in use. So I think at some point there is going to be this revolution. Arnaud Solomon, when I interviewed him, he told me that adoption will come when shit hits the fan. And I think more and more we're starting to see that. And pardon my my language. So the next thing I wanted to dive into, not exactly the smoothest transition, sorry, but another thing that makes Maya very different from Thorchain is that you're using multiple tokens. You have Cacao and you have Maya. Cacao is the asset that is used for as the intermediary between the trades, and that is bonded for nodes, and in your case, added to liquidity pools. So with the Maya token, as I understand it, this is a fee generating token that is distributed amongst kind of the people who invested prior to the liquidity auction, which I really do want to get into as well. So we'll get there. One thing I noticed as I was reading, you wrote that Maya should, or maybe someone wrote rather, forgive me, that Maya should be seen as a stock, within the group, and that it's not. And forgive me if I misunderstand. So this coin is not going to have a pair with Cacao, so their prices don't intersect with one another. So the first question I wanted to ask is, with the Maya token, say I receive it as an airdrop, which is very possible. Then, if I received it as an airdrop, how would I buy more or liquidate the token?
Sure. Buying more or liquidating the token will happen when there's a secondary market for it. That is, if a central exchange chooses to post it, or another DEX, or Thorchain, if they ever have a Thorchain Maya pool within Thorchain, they could definitely use Maya there. But it won't be in all pools for price reflexivity. That is, if Cacao increases, Maya increases, but Maya is also an asset within the pools, which influences the price, the deterministic price of Cacao, which then increases the price of Maya. And you see that's a circle. That's a great circle, right? It looks very self-reinforcing. Well, those are the circles you need to be careful for bubbles and crashes, because just as they go very, very fast upwards when it's going nice, it goes very fast downwards when it goes bad. So you just need to break that circle. So that's why Maya cannot and will not be within Maya tradable. So maybe for a while you won't be able to liquidate your Maya position. Buying and selling will essentially be over the counter, on Discord, like, hey guys, who wants a Maya token? And that's actually desired. We don't want a lot of liquidity behind Maya. We want the liquidity at the pools with Cacao, right? So then you say, then what is the airdrop good for anyways? Well, because if you hold Maya, you're entitled to a percentage of Maya protocol's fees. So every block, 10% of the fees generated from the swaps and the transactions in that block will be routed to the Maya fund, which will be then distributing it all every 24 hours on code, on chain, on Maya, to all the Maya holders, just for holding it. No need to stake or anything, nothing weird. So you just be getting Cacao every 24 hours, essentially like a paycheck. And that Cacao, you can then just immediately liquidate for Bitcoin, or bring some more Bitcoin and use it to add liquidity. Or if it's a lot, you can use it to run a node, or just keep it, hold the Cacao, be exposed to the upside of Cacao itself. So in itself, if you see, it's kind of a success fee. The more volume there is, and the more transactions there are, and the more swaps, then the more Cacao that is routed to Maya from the fees. And it's the way we earn. So if you see, we're aligning our interest and or incentives to how the community earns, how the LPs and the nodes earn. So that's great. We have the same interest at heart, not hyping a token, just routing more volume, which is real yield. It's sustainability, right? Now, a caveat is that the founders, although in the future, if you get my airdrop, you can sell it eventually if somebody will buy it, and their secondary market will probably develop, which will value Maya with a P/E ratio, essentially a multiple. It's generating each Maya, I don't know, $1,000 per year, and there might be a multiple of, I don't know, 7x or 10x or 20x. So then one Maya token will be worth the multiple times the projected yearly income. So in that case, you'll be able to sell your Maya position, and then you're no longer entitled to the Cacao, but you get a big influx in present value. But founders, so that's me, we will never be able to sell our Maya tokens. So they never vest, essentially.
Interesting.
On code. So we can never really exit the ship. We can just use the Cacao and use that Cacao to make any money. So the reason why that is very positive is that we're in it for the long term, and we need to make sure that there remains volume to be had in the future. And everything we work on from launch forward will be ways to increase transaction volume, which will increase the wealth of LPs and nodes. Now, if you think about it, since 10% of the fees go to Maya Fund, and actually only like 8% is to the investors team, and the rest, the other 2.1% goes to Maya Mask and LPs and nodes and Rune holders. So 8%. We're essentially earning for every $10 that we make for the community, that the community earns through our work in Maya, we earn $1. So I think it's very fair, and that's essentially what we're doing. So I hope that clarifies.
No, of course, and I really appreciate you explaining that. So back into that one statement that I thought was very interesting. You wrote it should be viewed as similar to a stock. Now, obviously, it seems like this asset is going to be very illiquid, so it's not very similar to a stock. Well, you're getting liquidity from Cacao, so just to clarify. But are you concerned that, say...
Actually, sorry to interrupt there. It's precisely as a stock. Let's talk Tesla. Tesla does not sell its stock in its e-commerce. It's sold in the New York Stock Exchange. Similarly, Maya will not be selling Maya. It's reflexive. It's selling itself. It sells it through a secondary market, through somewhere else. So it's actually quite similar to a stock in that way. And the reason I like that analogy, and coming back to Tesla, it's you have the product, which is the car. The product in Maya, it's swaps and the means of which you can use to do swaps, which is Cacao, right? Cacao is a product,
right?
And you have the stock, which is how the people involved in that project can claim some sort of ownership of it. Although, to be clear, Maya does not give any governance rights whatsoever. We don't have any governance at all. Nodes do. Nodes push code forward. Nodes vote. Nodes are the ones in control. So that's the only way I feel Maya is different than a stock. But it does have some claim over the fees, over the profits, essentially. So the reason why I like that analogy is the reason that the community is so much protected from us and from our investors. Imagine that right now Tesla dropped, I think, 60% in value, Tesla stock. Imagine that then also the cars dropped 60% in value.
Right.
That's not it. They're uncorrelated, the Tesla stock to the Tesla cars. If investors dump the Maya token for some reason, we're not affecting the product. The product is unharmed. It's still there, right? Whereas the problem with other ways of doing it, where you also get, if we didn't have two tokens, it was all just Cacao, and I got Cacao, it's as if Elon Musk got paid with Tesla cars. He can't use 1 million cars, he just has a use for one. So what would he do with the rest? He would probably sell them. And what happens if he sells them? He will bankrupt the company because there will be an oversupply of cars all of a sudden. Increase of supply means decrease in price. And at some point, there will not be enough operational margin to support that price, and the company collapses. So essentially, that's actually a great analogy to see this. So in our case, having Maya separate as this kind of stock thingy, it can go up, it can go down. It will not affect liquidity. It will not affect our nodes. It will not affect the transaction volume. It will not affect this product, which is Cacao and Rune are just meant to be references of value, essentially. It's information. It's just a means to inform in a decentralized fashion what the exchange rate of Bitcoin and ETH should be. That's what it is there for. Track value and reference and do this value reference. That's it. So
understood.
This way we're protecting that market and that product.
Well, no, but the only reason I was asking is because when you use that kind of language, are you worried that, say, a regulator might get upset at the potential of viewing it as a security? Like, has that ever been something discussed within the Maya team?
They will be upset. What can I say? We're decentralized, dude. We're decentralized. That's why we have an anon team where we are not subject to any one regulation anywhere. So yeah, it might probably be a security. That's an issue. It will be a hindrance for many central exchanges out there. But if you switch to Bitcoin, sell your Maya for Bitcoin and then use that Bitcoin somewhere, you can liquidate Bitcoin
Right.
for cash or whatever. But the problem is, unavoidably it will be a security, but we're doing it to protect our community. So, regulators be damned. It's we're gonna do it for you guys. Cacao is not. Cacao is purely an utility token, so that should not have any problem anywhere. But Maya token will most likely, in many jurisdictions, be considered a security.
I see. I appreciate your honesty, and I like your can-do attitude and energy. That was awesome. So now I feel like we dive too deep into that, but I did really want to talk about one of the more everything. Obviously, you can see that I have a lot of enthusiasm. And by the way, for anyone watching, nothing here is financial advice. I was never paid to do this. Aaluxx actually responded to me on Twitter and said, I'd love to do an interview, and that's why we're here. So I'm extremely excited for that. Full disclosure. Anyways, with that being said, so one part of the technology that I thought was really fascinating is that obviously Thorchain has an extremely powerful level of security because of the incentive structure and how much the nodes have to lose if they try to mess with the trading or to exploit the system and then thus get so much money slashed or so many tokens slashed. So what I thought was quite interesting is the play that perhaps that type of security could be leveraged on other blockchains. I was hoping you could dive in a little bit to security node technology and why you guys decided to create that infrastructure to implement on other blockchains.
Sure. So I'm not a fan of staking as it has become so popular all around proof of stake protocols. I actually believe that Chad Barraford here shares my thoughts on this. I was actually very surprised when I heard him say it once in Austin live. I was like, I think that exact same thing. The thing is, let's take Cosmos for lack of a better example. Although I love Cosmos, Thorchain and Maya owes their existence to Cosmos SDK and their technology. I just don't see how staking benefits security. It does not. You actually want quite the opposite. Bonds need to have a lot of skin in the game to run the network smoothly. If none of that skin in the game is theirs because they got it from people staking into them, then what the hell? I don't have skin in the game. I'm actually incentivized to misbehave. Essentially, people are held to the goodwill and the honesty of these nodes to prevail. And we've seen it actually in Osmosis. There was recently, probably 4 or 5 months ago, an exploit that a node itself performed in Osmosis because they're not disincentivized to do so. On Thorchain, on the other hand, they're super jealous and protective over Rune. They'll be super jealous of decisions made by the development team. They'll be super involved in voting and in reviewing the code and in running bare metal nodes and in protecting user funds, well, LP funds. Why? Because they have skin in the game, right? And as you correctly mentioned, these can be leveraged to run other chains. Thorchain is a great ecosystem, but it has to be very secure, and thus it cannot be running, smart contracts. It's like having people, startup people, running the Fed or something. So you don't want a lot of creativity and innovation in your central bank is essentially. So they don't run smart contracts. They don't run NFTs. They cannot do application-specific blockchains within Thorchain, but they have a lot of security. So how can we rent out or take leverage of the security? And the thing is, we already have a bit of the means because there exists IBC and there exists Bifrost. What is IBC? It's essentially a way to connect two Cosmos-based chains through a handshake deal. They both have to be in agreement, and they both agree to use that bridge wisely, and they exchange assets, right? Now, it's a bit secure because if the asset B here sends over 1,000 units of its asset to there, it will never accept more than 1,000 in return. So the other one, if they really misbehave and mint more of that asset, they won't really be able to profit off of it into this other chain's expense. So that's why it's secured. But you're essentially sending your funds abroad and hoping that they will manage them well. Bifrost is a bit different. Bifrost is how Thorchain works, and essentially you have an account here and an account abroad, and you control both, and you're kind of using them to wire funds between both countries, right? And that's more the Bifrost approach. But the funds never really exited any of those two countries. So it's a way, both are ways to route information and route liquidity, but it's not really a way to route this security. So you need a third way to connect them, and that's what security nodes is in Maya, which is nodes that already run Maya nodes on Maya. They create an account on this second chain that we decide to open, and they take this node account in this second chain, go back to the first one, and relate those two accounts. They say, this node over here, this is me. Okay? So now we know that. And now they are essentially in a list over here that the nodes in this other chain agree on through 67% consensus. And the people that already run nodes on Maya are now eligible to run nodes in this second chain. So that means you're essentially doing this, renting out the security. So you now have nodes over here that you can also put extra requirements. They must have this other new bond, and they must do this and must do that, and post this and post that. So all the requirements you need from that chain, plus being a Maya node already. And these two chains share Cacao as its main asset, which Cacao, remember, half of the huge bonds of Maya nodes is in Cacao. So these guys are very much interested in protecting Cacao's reputation, Cacao's purchasing power, Cacao's integrity. And then this chain is also connected through Bifrost for interfacing other assets other than Cacao with Maya. And this second chain can have smart contracts, can have NFTs, can be application specific. It can be whatever you want. But it enjoys now this huge skin in the game that nodes have. Another added benefit, which is the service from staking, is that staking generates an incentive to dox yourself as a node, because you want people to trust you, know you. Look, I'm Microsoft. Look, I'm this other guy. Trust me. Stake to me.
Right.
And the problem with that is regulation can get very tough in the following years, and they will target those nodes. They will ask them to cease and desist because they will be easily identifiable. And that will be an issue for all of these POS chains that market themselves as such. Since there's no staking anywhere to be had in this Maya and this security node ecosystem, then they will remain anonymous because they have no incentive to not be.
So I think that's an incredibly important observation. I mean, I've always been concerned about proof of stake in many ways. It doesn't mean that it shouldn't exist, because without proof of stake, we wouldn't have all these other innovations and other chains that are discovering new technologies that are just improving upon smart contracts and what we know and all the different coding languages, etc. Though I am very curious to see how these outcomes are going to turn out, because proof of stake involves you getting more stake. You need more trust in a person for that stake to be reliable and for you to feel comfortable enough to stake in that validator. So that's a really insightful point that you just made. So now this is actually, you'll forgive me because you just took my mind somewhere else that I'd never taken a moment to think of before. Do you think that the level of decentralization that is being accomplished right now on chains like Bitcoin, do you think that there might be a future where perhaps smart contract technologies might move more towards the direction of proof of work, or perhaps maybe innovating more and more to use the bonding mechanisms that you guys in Thorchain use in order to leverage smart contracts? Do you know of any technologies that are going in that route, or is that part of the next chain, which we'll definitely have to talk about sometime? But Aztec.
Yeah, well, that's a tough one. We don't really know where technology is going. You're talking more now about like consensus mechanisms, which is a huge technical and philosophical and analytical thing. The thing is, chains that focus on having a very specific money generating use case will be able to afford these bonds. The only reason Thorchain can afford these huge multi-million-dollar bonds is because they can provide the yield to back them up. If they did not have this huge use case, that bond just ends up leaving, and the security leaves. So you need to have very clear that some blockchains in the future will need to be very conscious of what is it that they're useful for and how do they monetize that in favor of whoever is posting these large bonds. Now in chains that are huge, like Bitcoin, like Ethereum, you have other things going for them, which is essentially the difficulty of colluding, which is something important and notable. It's very hard because it's a coordination effort. You need to coordinate a lot of nodes and a lot of wealth. But in chains that are more use specific, need to ask themselves these questions. Now, I believe there will always be a proof of work chain such as Bitcoin. I believe proof of stake algorithms can be much better for other types of use case. And I believe things like Tendermint BFT that Cosmos uses will also have its uses. Like, in my view, and I've said this repeatedly, this is not the first time hearing me talk, you in the audience. You probably have heard this from me already. But any engineering and any design decision requires trade-offs, right? Everything is a trade-off. If this chair, if I want to make it comfortable, it will probably require materials that will make it expensive. If I want it to be, movable, it will require using other stuff. If I want it to be light so I can transport it, it will also require different things, If I wanted to have many stuff for my glasses, it will make it heavier. So any decision you're taking, it's influencing another thing. And these trade-offs lead to diversity. That's why there's so many types of chairs, so many types of cars, so many types of everything. Same goes for blockchains. There are engineering trade-offs everywhere, not only the trilemma, security, scalability, and speed. There's other many trade-offs all around happening, and decisions that teams such as ours have to take every day, right? So there will always, I believe, be a place for different designs. Cosmos and its design will be useful for something. It might not be the most secure blockchain, but it's probably not meant to be. Not everything needs to be a huge safe. Everything needs to be commensurate to the use case you have. So Bitcoin fulfills its purpose. Ethereum fulfills its purpose. Thorchain fulfills its purpose. And many other different designs will do it. The problem is when you have something that the trade-offs and the engineering decisions taken do not align with the purpose you have, right? And whenever you think of a chain that you don't trust that much, or that you feel a bit iffy about, it's probably for that reason. Solana, that it's meant to be an Ethereum killer. Well, an Ethereum killer, what requirements does it have? Decentralization. And Solana is not truly decentralized, right? So that trade-off is not there, right? So that's when there are glitches, when there is something that pops out, and that needs to be fixed, right? So we need to find out ways to make, if you want to be an Ethereum killer, well, you need to be very much decentralized. And you have to take engineering decisions that maybe you need to be slower than if you're not so decentralized. So maybe you need to have less nodes, or maybe you have to post bonds, but you essentially need to align yourself with your purpose and use that purpose to guide your engineering decisions whenever you are at a crossroads.
That was very eloquent the way you put that. Down. Inevitably, different technologies have different use cases that require different designs, and the trade-offs are always there. It just depends on what the project is trying to accomplish. Wow, that was excellent. So what I wanted to ask you next, one thing that I appreciate about Cacao as a token a lot, and this video is not meant necessarily to shill or anything, but I appreciate the efforts to do a fair launch. I was hoping you could dive into the fair launch process itself, and also philosophically why you and your team chose to create the utility token and launch it in that fashion.
Sure. There are three things that these fair launch is attempting to do. Number one, have as much of the token be circulating. That's in the benefit of the community from the very beginning. Second is to have it distributed as fairly as possible and as wide as possible to as many people as possible. In a way, everybody feels good about it, and not like many people after IDOs that feel essentially, fucked.
Right.
And last, raise as much liquidity as possible, because Maya's survival is contingent upon it having enough liquidity to have affordable swaps to be able to generate any yield in the first place, right? So with that in mind, the way we're launching is all of Cacao, well, 90% of it to be exact. The other 10% goes to a reserve for impermanent loss protection. But 90% of Cacao, of the supply of Cacao, will be essentially given away to anybody adding liquidity in the form of Bitcoin, ETH, or whatever other assets we support at launch, which is actually amazing because of the way AMMs work. If you put $100 of Bitcoin, the other side will be worth $100 Cacao. So we're essentially doubling the capital you had, with one caveat. We will have 3 different tiers that you choose when you have that liquidity, which one you want to be. If you're tier 1, you'll actually be able to just withdraw 0.5% of your position every day for 189 days. But you will have a bit of benefit because you will get additional LP units, so additional capital. And where is this capital coming from? From tiers 2 and 3. What are tiers 2 and 3? If I'm tier 2, it will be a shortened time frame, 63 days, and I can withdraw during those days 1.5% of my position every day, after which I'm free. And the tier 3 is 21 days, where I can withdraw 4.5%, and after that, I'm free. Now, you might say, hey, those are great. They are less risk, they are less committed, they're shorter term, which is why we take a few of their LP units away. In the case of tier 3, we take 33% of the LP units. And in case of tier 2, we take 10% of the LP units. And whatever is raised from tier 2s and 3s is sent over to tier 1s. And this is very important and very necessary because we need a lot of people staying for a longer horizon while Maya gains its foothold, right? Its footing. Because we need to raise that liquidity, maintain it, get some volume in, get some integrations, raise more capital, find more ways to make us relevant so that we can actually sustain that capital. Now, if you listen to this and you say, wait, I don't want any lockups, that sounds bad. Fine, you can just wait for the end of the liquidity auction and then just buy Cacao, but now you will have to buy it, not get it away for free. If you're getting it for free, you'll need to take these little inconvenience into account. Now, so we're giving all of Cacao away. That's why the team doesn't have any Cacao. And essentially, this product is meant to start working in pools. That's where it needs to be, working. So that's where it's going to start. And really believe this maximizes our chances of getting a lot of liquidity. It also is fairly distributed. The more liquidity you add, the more Cacao you get. And it will 90% will be circulating. So, I just feel it's great. And there will never be any vesting of anybody in Cacao. So it will never have any sell pressure whatsoever.
Wow. Oh, hold on. I just got a little itch. I mean, no, I find that very admirable that that's the effort you guys are taking with the direction of the Cacao token. So where did I go from here? God, questions.
No worries. I have a point.
Sorry, forgive me.
Looping back from the trade-off discussion and having to make choices and having diversity. That's the reason why I'm bullish on Thorchain and why I'm bullish on Maya. The fact that there will be diversity of blockchains is precisely the fact why we need cross-chain technology to begin with. If you don't believe there will be diversity in chains, if you believe Ethereum will take over or Cardano will take over or Bitcoin maxis, whatever, and that's the only thing there's ever going to be, in 5 years from now, don't invest a cent in Thorchain or Maya. But if you believe me and if you've seen in the wild the type of engineering and design choices that lead to trade-offs, and that it's something so complex like crypto will have this superpower, and that there will be these many amounts of trades doing different things for different purposes, then guys, we need a way to swap between them, trustless, permissionless, frictionless, and decentralized. That's a fact. So I believe that to be the future. I believe in a multi-chain future. And thus, we need a cross-chain decentralized exchange that is affordable and that is available and that is redundant and that is working and for any use case.
No, and I think you're 100% right on that. I think there's going to be multiple blockchains, and throughout time, we're just going to see more and more and more and more and more innovations. Like there's not going to be one chain that rules them all. So I agree with you. I agree with you there. So now, first thing I want to say, this has been an awesome conversation. You are definitely, if you are not following Aaluxx Smith, you need to do that like now. What an incredibly thoughtful person you are. And so the next thing I wanted to ask you, so in Thorchain's design, and I asked Chad about this, there's this concept of planned obsolescence, which is exactly what it sounds like. It's always meant to be a decentralized system, or nodes continue to operate the entire network over time, and then the community can work together to add new tokens over time. Is that the plan with Maya, or what does the future hold in terms of the ongoing movement in Maya?
Sure, we actually agree with that. We don't believe in these. First off, we don't believe in this God complex of some chains have, like overly reliant on one founder or one person or one team. I believe crypto is here to stay for the fact that it is so faceless. Like Bitcoin would not be the same if it had this person ahead of it. So we need to be faceless. We need to be decentralized. We need the community to take responsibility and to get involved. Just as in any democracy, you need to inform yourself and go out and vote. In a decentralized system, you kind of have to do the same thing. You have to go out there, understand what's going on, and contribute. So yeah, we need to go in that direction. As you know, and I've mentioned, we're incentivized to be in it for the long term and to make sure that Maya is set itself for transaction volume growth. And we really wanted to grow and be super important, but it will take all of us to do it. It will take LPs, it will take nodes, it will take community developers. It will take having an operational budget, which we do have, to run itself and to work to keep it secure and to keep the lights on. So I fully agree with that. It's a direction I want our team to go. Anybody that wants to get involved in Maya can get involved anytime. The code is open source, and you just need to get on it. So hopefully we can get there. Bitcoin's more or less there, Ethereum more so, and Thorchain is very much on the way. And I hope we can do the same for Maya. And that people take it seriously, that we learn from our past mistakes, that we understand that the more responsibility you take, the more power you have. And that's what the community needs to do. So yeah, I agree with that vision. Hopefully we can achieve it.
Hey, if there's anything I got to say, you definitely sound like the team with the right head on the shoulders. So I think you will accomplish it. At least I do. So the next and final question that I wanted to ask you. Actually now I just thought of a bunch of other questions. Okay. We've been here.
We'll have to have episode 2 and maybe episode 3 as well. So
we might need to do a 2 and 3. Okay. Okay. Actually, I got 2 more questions, and then I'm going to let you go. So the first one is, we've seen the collapse of FTX, and I'm not a fan of just creating content all about that all day, but I did want to ask you, as a developer working on cross-chain technology, what are the ramifications that you think are coming from this collapse?
I believe it's positive for decentralized technology and for cross-chain technology. I'm obviously very disappointed with the people involved. I'm very sad for the people affected. I had people I know that got burnt by it quite a bit, and I am very sorry for their loss. Because we got to learn. This is not the first time this happened. We've had central exchange implosion every cycle. Not your keys, not your coins trending, and all these. Why are we here for? To be decentralized, to be trustless. So we gotta learn. We gotta learn from history. We gotta help that influence our future decisions. We have to understand that convenience isn't anything. For the traders out there that say, Binance and all of these have amazing trading tools, sure, go trade and then take your funds the fuck out. sold them cold. You don't leave all your coins there. Well, there's lack of transparency, contagion effects, ramifications, trust systems that are not really that trustworthy. So many things that can happen. Just we need to learn to grow up, be decentralized, invest in decentralized systems, see that they're well funded, and invest in user interfaces and customer experiences in these decentralized systems so that we can completely move away from that. It obviously sets us back liquidity wise, but I think it's for the best in the long term. We need to build stuff that is not bubblish. We shouldn't be here for the hype. We should be here for separating money from state. We should be here to truly have a system that will stand the test of time. We're here to bank the unbanked, to reach new heights as a society, to have new ways of transferring value and transferring information that can no longer be easily corrupted. Let's use it, develop it, believe in it, invest in it, and don't go the easy way out. So we already saw that it was great for Thorchain and its volume. It is a huge hit to centralized exchange technology and a huge win for decentralized exchange technology. And it pains me to say it, but we need to learn as a community.
Right. No, I think you are right on the dot. I agree 100% with what you said. It's tough getting phone calls from my family members that are like, "Do you see all this stuff? Crypto? What's going on with crypto?" It's like, and I have to tell them like, nothing's going on with crypto. All the stuff still works. You can go on Uniswap. You can still send Bitcoin from one person to another without anyone in between. You can still use Monero and be as private as you want to be. You can still run a smart contract. You could even do futures if you want. I mean, it's all there.
You can swap. You can swap cross chain, no problem.
You can swap cross chain.
Yeah, and it's something that I love to say. Like people either believe it's obviously has always been possible, or some people still believe it's impossible. No, both are wrong. Just a year ago, a bit longer, thanks to Thorchain. And they're still alone. I'm trying to get there and make a party with it, but we haven't reached that yet. Hopefully very, very soon. But they're still alone. Like, where is everybody's head in the sand or what? That's what we need to be building, decentralized system. That's what we're here for.
Right. And finally, my last question to you, and I'll probably have to ask you this question again in episode 2, whenever that is, or 3, who knows. So I think you and I both agree that the world is becoming, I think it's going to be more cross-chain. If I was a gambling man, that would be my bet. And I have to ask you, with what seems to be this sort of beginning of a new renaissance of decentralized technologies, going back to the philosophy of decentralization, of self-custody, of holding your own keys, what do you think the future for Maya, Thorchain, what do you see happening in the next couple of years?
Wow. Well, first off, if there is another bull, which, maybe there won't ever be, and it will just very stably grow from now on, we don't know. But if there is another bull, it's going to explode. Bulls bring a lot of volume, just as drop-offs do. But due to the deterministic valuation model, and just Maya and Thorchain will explode quite a bit. And people, I believe, will take interest when they see that hockey stick going up, and will now understand that how powerful this technology is. Most technologies I've seen take one cycle to really flourish. And I think that's the case for Thorchain. It hasn't been yet one full cycle. As long as people see that it was great in bull, it survived the bear, and it then exploded again in the new bull, I think it will be super powerful. I also see a lot of new things coming on. Thorchain just came out with savers. They will probably come out with lenders next. We'll jump in that bandwagon when it's time, not from the very beginning, but we're going into the smart contract route through Aztec that we'll talk more next time, and to probably stables later. We'll see. But there's more technology coming. We're two teams building and innovating and having ideas, and hopefully there's a third coming, and user interfaces and community devs. And the more energy there is, and the more people see that we're still here and that we're working in something great, the more stuff we will do to probably have even more things in the future. Order books, it's huge. I'm really looking forward to having that in my Thorchain. Perps with perpetuals, that would be also great. We'll see how we design that, but it will be pretty interesting. There's so much to build, so much to do. It's so exciting. And the thing is, remember, there's a time risk to decentralized systems, smart contracts and the like. When it's just one day out, you still are not very sure of its security and how sturdy it is. But after 1 year of being battle tested and nobody has been able to take any funds, it looks much different now, doesn't it? And that's what will be happening with Thorchain and Maya as well. Once you see, look, exploitless for a year, or exploitless for 2 years, or exploitless for one full cycle, it will generate just so much trust, so much obvious value, and just so much use cases and adoption. And of course, this liquidity increase will make swaps cheaper because of how CLP works. So all of these will just increase pool depth and make us more and more and more affordable over time. We're essentially having this cost curve of cheaper and cheaper and cheaper swaps. And you've seen what happens with cost curves. Watch Tony Seba and his lectures, which are amazing, about cost curves in solar energy and battery technology and precision fermentation and all of that, and what had happened, what that makes for adoption. So very excited about the future with Thorchain and Maya, and really sometimes I wish I could fast forward. But we need to go through these build stages and through the hard work to earn that, and we'll learn it together.
Well, you heard it here, folks. The beautiful future of a cross-chain world may be upon us. And Aaluxx Smith, I just wanted to say I'm so grateful we had this random spur of the universe that just seemed to have brought us together. If you guys have not already, go to this guy's Twitter. I will have it on screen or link below. You'll know. If you enjoyed this content, please like and follow. I will also put all of the information for Maya Protocol below in case you guys are interested or want to learn more. Again, Aaluxx, thank you for your time. Thank you for everything. I'm so excited when we do episode 2. Cheers.
Looking forward to it.
Safely.
Thank you for listening. Bye-bye.
See you. Thank you so much for watching Degens for a Brighter Future. You should definitely subscribe so you can stay informed on the crypto industry by watching our shorts and continuing to check out our podcast, like this one I did with the team from Cans of Finance, which is working to create DeFi tools for the African continent, or this one that I did with Chad Barraford, the lead developer of Thorchain. If you enjoyed this content, you will definitely enjoy this episode. Anyways, thank you so much for watching. Degens safely.